And that means we're now live here on our Tackle Trading Halftime Report, our YouTube show that we do once every day whenever the markets are open, 12:30 Eastern. We go live. We break down the markets one step at a time. Stocks, indexes, commodities, currencies, crypto, pretty much anything grabbing our attention that we want to analyze, give you guys some insight, and better help you run your daily routine. Welcome, welcome, welcome. If you're a veteran of our community, come on here and pop in Team Tackle in the chat. That's our official hashtag. We appreciate you guys as a part of this halftime crew that come here each and every day. Let's keep the energy high. Let's keep the conversation going. I've loved the chat here the last couple of months. I think you guys are doing a really good job helping each other, embracing each other, and embracing this whole idea of team and tribe and community. Today's show is a pretty simple one. We don't got a lot of news in the markets going on. We got some speculation around stimulus, more updates on the technicals. We're still kind of pushing towards some breakout locations on some of these indexes. We'll look at it one step at a time. We have jobless claim numbers that did come in, that weekly, economic report. We'll look at some of the economic data, see if there's anything that the guys are seeing that's interesting. But basically, we're going to work through the markets from a top-down perspective like we always do. Today, we've got Matt running screens, doing analysis. We got Mark on the back end providing insight and analysis as well. I'm your host, Coach Tim Justice. We got Cody on the back end producing. Regular crew, let's light it up. Matt, how you doing today, sir?
I'm doing absolutely fantastic. Not doing as good as Boeing here today, though. I can tell you that, Tim. Boeing, this is a big day for old Boeing, and we've had a lot of hate to throw at Boeing's way over the last couple of years. And just to remind people, just a tiny bit of that journey, right here. Here's that first plane that goes down, and then that's how stock goes down. Now, what happened today? Well, what happened a few weeks ago? They got certification through the FAA to fly their Boeing 737 MAX plane. And today, they had their first one. They had a little bit of a media flight, not a real flight. So a little bit of a media flight, 45-minute jaunt out Dallas, Texas. And Boeing 737 MAX plane in the air again.
It's a big day for the company. There's no question about it. They've gone through a lot the last couple of years, and we've talked about them a lot on this channel and this show, Matt, especially as they were going through a lot of that. Stock is up big here. I mean, what's your read here, Matt?
I'm still not getting on a Boeing flight.
Yep.
Okay, but
let's start with that. Yeah.
Yeah. Let's start with that. But no, I do think it's a positive thing for Boeing stock. Obviously, this is something. The 737 MAX was their next edition of their mid carrier. Is supposed to get up there, and orders were out out of this world. Orders were there, and Boeing before this. For new traders out there, old traders know this, but I mean, Boeing is just one of those stalwarts in the marketplace. The brand image of Boeing was as good, if not better, than most American companies out there. Would you agree with that?
Yeah.
I mean, it was a stellar brand image that towards everybody. Like everybody hates Facebook, right? Like everybody does. Even users of Facebook hate Facebook. Right.
They begrudgingly go onto Facebook and just log. Yeah, absolutely.
Yeah.
Yep.
Everybody loved Boeing. Mm-hmm. Like everybody did. So
it was one of those blue chip names that was at the top of many people's
absolutely.
list. We loved it too. We were right there. We absolutely loved Boeing for a very long time.
And most likely I'm going to love Boeing again at some point. But it's, I'm sorry, when 330 people lose their life and you knew about the problems with your plane, it's going to take, at least me, it's going to take me a little bit of time to get over that. Mm-hmm. For me as a consumer to trust it, for me as an investor to trust it. Does that make sense?
Absolutely. Who else is doing really well today?
Yeah.
No, that you do?
No. As in that was like a
go ahead.
For you to go ahead.
I understood, but you said yeah. I'm like, are you going to make a guess here?
I figured you know me. Like, go ahead.
One of our halftime crew members, and his name's Steven, he's in the chat all the time. I don't know if Steven's here today. He told me this morning, Matt, in the lounge when I was teaching the lounge with all of our crew, he just recorded his 1000th live trade since he started trading.
Steven. Well done, Steven.
and he journals everything, Mark. He's
Well
very,
done.
disciplined in that regard. I thought that was a really cool milestone. And the fact that, you're keeping records, you're going through this journey. I remember meeting Stephen 3 or 4 years ago when he first was in Dallas, Texas, talking about wanting to do this, and he didn't know anything about it. 1,000 live trades, dude. That's awesome. I thought it was a really cool
1,000 live
moment.
trades on the same day Boeing launches out of Dallas. Oh my goodness.
There's a correlation going
There's
on.
a correlation somewhere there. But no, that's absolutely amazing for Stephen. And, Tim, honestly, that's the beauty of the lounge, to have those types of conversations. And I'm sure, our community was very, very, very happy for Stephen. And I'm sure there's some in our community that were inspired to start doing it, taking it a little bit more serious as well.
Yeah, it was an awesome moment. The entire chat kind of blew up there. Great job, Stephen, and all that kind of stuff. And Stephen, if and when you do watch this, I know you'll be here at some point. Again, congratulations, and thanks for sharing that with all of our crew out there. Let's start with the markets one step at a time. And I'm going to actually get Mark in here first. Mark, just sentiment-wise, just general read. First of all, how are you doing, and how are you approaching and interpreting these markets?
Listen, I hope these markets, it remains my favorite market of all time. The craziness, all that. As a cash flow investor, this has been just it's been a really, really nice stretch too lately. So everything is really good right now from a cash flow side. And so then I'm in a good mood too. Like my mood is oftentimes correlated to how I'm doing in my trading. And it's been a good stretch. Markets are frothy. Markets are exuberant. Markets are crazy. But until there is a bearish theme that emerges, I've talked about this a few times over the last week. Until a bearish theme emerges, I'm very confident from a cash flow perspective.
One of the top conversations happening this week has been around stimulus. Matt, you broke it down a lot yesterday on Monday and Tuesday. We've been talking about it as well. Matt, you've been fully on the board that you're expecting a smaller version of some of the original numbers that were being put out there, say 2, 3, 4 months ago. And now they are talking about it. Top Democrats actually put together a bipartisan proposal worth about $908 billion. Mitch McConnell, the Senate leader, obviously on the Republican side, did not say that he supported that yet, but is willing to start having conversations. I know that Nancy Pelosi, Chuck Schumer said these are acceptable starting points to start these conversations. It feels like they're now starting to talk numbers, Matt. They're willing to at least have the discussion across the aisle, and it looks like things are moving forward positively. Matt, what's your read on stimulus right now?
Yeah, I think from yesterday we broke down the numbers of what that $908 billion mini plan, light plan, skinny plan, right? 908 skinny plan. But we broke down those numbers yesterday, and the original proposal that the Democrats had was $3.6 trillion, and the original proposal that the Republicans had was $500 billion. 3 weeks ago, before the election, we were close on a deal that was approaching $2 trillion, close in terms of the agreement on numbers. I don't think at this point, there was any desire to get a deal done by either party before the election, quite frankly. And so that kind of got pushed out the door. But now McConnell's talking about, well, that's a little bit higher than where my comfort is. I'm more comfortable about 500 billion. Come on, McConnell. We get it. 3 weeks ago, you were talking 1.5, 1.1, 1.5, and $1.7 trillion, McConnell. So we do have memories, McConnell. But McConnell, talking about 500 billion, but the something is happening where you have quite a bit of bipartisan support happening here. And there was only 8 senators that really kind of signed off on this deal initially, and they put it together fairly quickly. So they didn't include a lot of the other senators in the initial discussions. And now that it's out there, Senator, the blue dog.
Blue dog Democrat. Schumer?
Yeah, no, it's not. Schumer's not a blue dog. There's only like one. But I can't remember his name. Joe Manchin. Joe Manchin. Yeah, I had to think about that one for a second. Joe Manchin was all over the airwaves the last 24 hours promoting this, and Joe Manchin is one of those individuals in the Senate that Democrats like having them in their role, but sometimes he is goes on the Republican side quite a bit. So he was kind of leading that charge there, and it seems to be getting more bipartisan support in the Senate right now. This deal could get done fairly quickly before the end of the year. I believe it's actually going to get done. I think the market is starting to believe it's going to get done as well. And quite frankly, I don't see a lot of landmines. If McConnell is comfortable at 500 billion, but most of the other Republicans are comfortable at 900, a deal's going to get done there. It just is. So it's a matter of what is that final number, and it's a matter of the time frame here. But I think something gets done before the end of the year.
Well, and then even if they do get something done, especially because there are some deadlines about unemployment benefits and things towards the end of the year as a part of the original CARES Act, I think that's going to put some pressure on them. It does not prevent them from striking other deals in 2021. So these smaller conversations may be an ongoing part of where the markets are. Mark, there for a while, there were some market participants that were worried if we didn't come in at like 2 trillion, the market would sell on that. The market doesn't seem to be having any problem with these numbers at any of these levels they're talking about. What's your read on stimulus right now based on the conversation, market responses, any reactions, things like that?
I don't, it's like Matt and you and I were talking before the show, and it's like, what is the read on McConnell? What does he want to do? I mean, he doesn't want to spend any money, but he knows he has to. So what is his game here? It's a very tough environment to read on the specific, like what number it will come in. Like the market just doesn't care right now about anything. Like, it just comes down to, and we talked a little bit about this in pre-production as well, is like the market literally does not care about anything right now. Stocks only go up. This reminds me very much of the period that we had in July, and especially in August, where it's this frothy environment and everything, and nobody, like, there were stimulus problems in August. Market didn't care. The market doesn't care about anything until it does. And this environment reminds me very much of August, where the market just does not care. Any negative news, doesn't matter. Positive news, boom. It's like when we had the transition news, where the GSA said, we're going to release funds to the Biden, President-elect Biden coming in, and market went up. And so like any good news, the market just, that's like, or even things that could be perceived as good news, the market goes up. Bad news, it doesn't care. It reminds me very much of August right now.
And let me be very, very clear on something, guys. The $900 billion is a starting point. That's what it is. The 900 billion is not the end result. It is literally the starting point. And for people that think the vaccine is going to come out and it's going to cure all of our economic problems, they don't understand consumer behavior and how consumer behavior changes in the face of some of these things. They don't understand how corporations' behavior changes in these types of things. And this takes a long time to recorrect. It takes a long time. This is not the only stimulus bill. It's not the only stimulus bill that's going to happen in the next 4 months. And it's not the only stimulus bill that's going to happen in the next 365 days. That's what the market is believing. It's not about the 900 billion. It's what I said 3.5 weeks ago. They're going to go into shorter bills, timely bills, targeted bills, and it's going to be multiple of them. 900 billion is actually higher than I thought the initial starting point was going to be. I thought it was going to be closer to the 500 billion that the Republicans wanted. But now you have a Democratic senator out of Arizona that's already been sworn in, Mark Kelly. That's already changed the dynamics there. You have Republican senators that are now pushing for more stimulus. That's changed in the dynamic from 3.5 weeks ago. You have more bipartisan conversations happening right now than you've had in literally years in the Senate. This is going to happen. It's just a matter of the timing and the overall number. And that's what the market is believing.
Well, and I think with that assumption and that kind of clarity, the markets are just moving forward, and you can see it even just this week, just kind of slowly creeping up the chart, kind of just performing the way that they have in quite some time. Markets, yes, are frothy, like you say, Mark, but they've been bullish as well. And, obviously just on point. Yeah.
I keep hearing from a lot of people how the market is not taking account all this negative data, right? Guys, the data from an economic perspective right now is not nearly as negative as it was 4 months ago. The labor market has really kind of stalled in that, the unemployment claims today came in at 712,000. It was 775 on the expectation. If you look at the chart here on initial claims, look at that thing. It's flatlined basically for the last 2 months. This is a new norm, guys, right here. nothing has really changed economically in PMI numbers. Nothing has changed economically in months. When you're looking at labor market numbers, nothing has really changed in months outside of recategorization of certain things to make the number look better. But it's really the same labor. We're really in the exact same labor market right now as we were 2.5 months ago. Nothing has really changed in there. So when you're looking at this from an economic perspective, it's really kind of just in that stagnation type period that takes time to really get cooking, cooking one way or the other, obviously. But the reality is stimulus is coming, the economy has stalled, and we're trying to find a way out of that. And post-vaccine, guys, yeah, that cures the health problem. That doesn't cure the behavioral problem. The behavioral problem takes years. Stimulus is going to happen in that time frame. I promise you that. There is zero chance stimulus doesn't happen.
Mm-hmm. Mm-hmm. Yeah, I'm with you 100%. I was reading a quote here from Robert. Go back to bed, America. Your government is in control again. Bill Hicks.
Oh, that's funny.
And a Bill Hicks reference there, Robert. Definitely a comedian I enjoyed years ago.
Always funny. Yeah. Always funny.
I'm with you. I understand. I think what it comes down to answer the question you threw out there is why do these people continue to think the market's going to sell off, or that the data is bad, or they're waiting for something looming? I think there's just a general distrust of the rally if you've not participated.
My point is, it's not the data is not generally great, and it's not generally terrible.
Mm-hmm.
Like, it literally hasn't changed in a couple months here.
Mm-hmm.
Earnings reports have actually been really, really, really positive.
The quarter was great. If you look at it in totality, the quarter for the entire, earnings for the S&P was actually really strong. It didn't react well in October, Matt, as you were breaking them down one at a time. We didn't always get those positive bumps, but earnings were pretty good. And the market's now up here towards the highs, starting the month of December, a couple of dojis going. Let's flash you the charts here, Matt, because I'm seeing a potential breakout on the Dow. The NASDAQ's pushing their levels. The RUT is almost about to break out. The S&P's kind of hanging out here on a doji, but give me a read through these 4 indexes if you can.
Yeah, in the S&P 500, technically we did break out here on Tuesday when we closed above that 3650 handle right there, and then it's retested yesterday. And today, very slight news day today, just a little kind of a nothing burger today, but obviously staying above the breakout channel there. When you're looking at the other index on the Dow Jones here, just a quick update here, showing relative strength here today, obviously with the Boeing news and Boeing pops, and obviously Boeing has a very is heavily weighted within the Dow Jones here. Good industrial play, 3M, Boeing, obviously Honeywell we talked about yesterday as well. When you're looking at the Dow Jones here and you're looking at that 30,000 number, obviously we just claimed that 30,000 number here today. If you look at this on a 5-minute chart, you see the market kind of performance on the overnight action. Here's the cash open right here, and then over the course of the last hour and a half in the market, we're just kind of fading just above that 30,000 number. But I think that is a positive. Look at the market coming up into that 30,000 number, break out of that 30,000 number, and then come back down multiple times throughout the intraday period, test that 30,000 number, stay above that. I do think you have to consider that as a potential breakout. It's not strong when you look at the daily chart. It's certainly not strong. You're still underneath the wicks at 31,165. But the reality is I do give a lot of credence to that 30,000 number, and especially on the intraday chart, seeing the consolidation above that 30,000 number, I do think is a positive. And then you have a continuation type bullish trigger above that 30,050 level to see that ultimate confirmation happen on the Dow Jones. But when you're looking specifically at the Dow Jones and you're saying, okay, if this area of the market is going to break out, let's take a quick peek at some of the stocks. Let's go to FinViz very quickly. Just give me a second. Let's go to FinViz. And when you're looking at this, Tim, and you're saying, okay, let me go ahead, and we're looking at the Dow. I just like to go look at the Dow here. So if you look at the index here in FinViz, a lot of us that tackle light scanning on FinViz, and you just look at kind of the Dow here, go to charts, and you're looking at the Dow, and you're saying, okay, with the Dow breaking out, I'm expecting a little bit of price appreciation here. So obviously, I don't want to get CRM. Mm-hmm. CRM's going down, gap down out of earnings. That's obviously a stay away. But look at Disney here, right? Disney breaking out. I might want to take a peek at that one. When you're looking at Boeing, obviously we already talked about. When you're looking at Apple threatening that consolidation breakout, Caterpillar hovering up against that breakout channel. You got CVX, Chevron here on a bullish retracement in the energy sector, right? You go, and that's what top-down mechanics really is. You say, okay, I have this index, it's threatening the breakout. I expect price appreciation on this index above that 30,000 number, especially above 30,050. So what charts in this index are setting up? Look at the Dow here, Dow Chem. Let's take a look at that. Let's take a look at Chevron. Let's take a look at Disney. Let's take a look at Honeywell again. You know, IBM, absolutely not. Big Blue, not on my watch list. Never will. Somehow I got stuck with it in the Dow 30 game. I don't want to touch McDonald's at the low with the breaking out. Look at 3M here. So Disney breaking out, Honeywell breaking out, Apple threatening a breakout in the Dow. You have Caterpillar threatening a breakout in the Dow. So those are all breakouts that are really similar to what's happening, you know, within the overall structure of the Dow itself. I might want to take a look at that. When I'm looking at this Dow breakout, I'm saying, okay, again, don't want to touch Home Depot near the lows. Don't want to touch Intel. You know, overextend to the highs. Don't want to touch Coca-Cola because it's not a swing trading stock. Don't want to touch JP Morgan because it's JP Morgan. You know, but I might want to touch 3M here. Nice little bullish retracement. I might want to look at Chevron, CVX here. Nice little bullish retracement. So coming back into toss, and I say, okay, now looking at this on the down, I'm saying, okay, now we got breakouts on Disney. Broke out yesterday, holding its head above water. Expect some price appreciation on Disney. When I'm looking at Honeywell, threatening that breakout channel still right underneath 210. Nothing has changed here today. Keep focusing on that 210 breakout on Honeywell. When I'm looking at Apple now, same thing. Broke out of that 221 and a half level, consolidating above it. Now again, this is when you're looking at the left of the chart. We did break out of that first one. Looking at the left of the chart, ultimate confirmation would be above 126. You can certainly trigger above the intraday highs here, target 126 up to 137. So you're looking at that on Apple. When you're looking at Caterpillar here, same type of thing as Honeywell. Maybe not as constructive as Honeywell, but the same type of pattern and trend. Looking at Caterpillar above 176.50 there. When you're looking at, if you're saying, okay, I might not want to do the breakouts because I like retracements a little bit better. Well, retracements are fairly decent. A bullish retracement is fairly decent when their index is breaking out as well. So when you're looking at those retracements and you're saying, okay, in the industrial space, I want to look at this on the dip. Well, you got 3M on a dip, standard bullish retracement, 3 days down, find support, fighting for that upward movement in price with confirmation on 3M. When you're looking at the other one in the energy space, we know what's happening in energy, forming a nice little bullish retracement. You know, if there's one thing those coaches loved in that scanner report last week, it was energy on a bullish retracement. You have energy on a bullish retracement. Now looking at, you know, Chevron, you know, specifically a Dow component. Chevron looking very similar to the industry. Look at Chevron on this little retracement here. 3 days down into the bull area, and then look at it stop on a dime like an Allen Iverson crossover here. Just gotta love that. Look at this right there at $87.
The intraday trigger's clean too. I love
look
that.
Look at that consistent, nice little fade down, double bottom, breakout. Look at that trigger above 91.15, we'll call it 91.20, and then you should see some upward movements in price. And so when
the precision of that, like whether you're a day trader or a swing trader, whenever you have a floor that precise, that is a real sign of strength. You know, the Bears have, how many was that? How many different time periods did they have to send it lower?
It was 3 days down, 3 days on the consolidation.
Yeah, I mean the Bears have this, I mean, think about the psychology of it. The Bears have so many chances to send it lower, send it lower, send it lower. They fell. They fell. Well, they fell enough. Price has one room to go, and that's it.
Yeah. So when you're looking at the Dow here, Tim, and you're saying, you know what, I like this breakout, I like it a lot. Then you go down into the components within the Dow and say, okay, which ones do you like the most? which ones are these are gonna fly here? And I like Disney, Honeywell, Apple, Caterpillar. Disney's already broken out. I got Apple on the first breakout, Caterpillar and Honeywell hovering right underneath the breakout channel. 3M and Chevron are fighting for confirmation right now.
Mm-hmm. Well, and it's a wonderful exercise of top-down analysis. You can do this, by the way, with an index like Matt just did with the Dow, and kind of start with the top. You can work your way
even
through
more
it.
powerful with the S&P.
And you can do it with sectors too. Absolutely. You can go from the S&P into the sectors in the S&P into the industries if you want to. It's a wonderful exercise. If you learn how to do that, it'll help you, give you a lot of confidence when you're picking and selecting stocks. So appreciate the breakdown, Matt. That was awesome.
Well, and quite frankly, it is more powerful on the S&P because the top-down analysis literally does go index, sector, industry, then stock. Whereas in the Dow, you're really just Dow stock.
I love it though. I mean, and the Dow threatening that breakout, you're right. It's got a lot of healthy activity here, looking very, very strong. And there's a lot of good candidates still on that list. What about the other indexes, Matt? The S&P broke out earlier. What about the NASDAQ here, the RUT? They kind of look like they're threatening too.
I mean, the NASDAQ breakout is a little bit more difficult, as we've been discussing, because kind of like Apple itself, there is quite a bit of chop to the left. And so it's a little bit difficult when you're saying, okay, ultimately, what is that confirmation? I do think ultimately confirmation is above the all-time high, above 12,500, but now you're overextended coming into it. And so kind of what you're looking at right now, you're saying, yeah, you are seeing price movement coming into the NASDAQ pretty aggressively over the last week. We haven't seen the same thing in the Dow, in the S&P. They've been hovering right underneath their breakout channels. And so the NASDAQ was obviously a little bit of an underperformer, especially in those first couple weeks when you saw energy up 24%, 15%. And we talked about how that type of price performance cannot continue. That can't be a reasonable expectation to see energy do something like that. And so in that environment, you're going to see NASDAQ catch up in a little bit. You have seen that, not to the extent that energy did in the first couple of weeks post-election, but you have seen it catch up a little bit in the last 3, 4, 5 trading days. Now you're overextended. Expect a little bit of consolidation. For me, coming into this weekend, and specifically tomorrow in the scatter report meeting, I am going to be looking a little bit more closely at Dow components. I'm going to be looking a little bit more closely at S&P. I'm going to look a little bit more closely at the small and the mid caps, because those are the indexes that right now are setting up for potential really good trades. Whereas in the NASDAQ, you're just simply a little bit overextended in the short term coming into that ultimate breakout. I expect a little bit of consolidation, and maybe I expect a little bit of consolidation because that's what I personally need for me to trigger into something. But in terms of the S&P, the Dow Jones, and specifically here on the Russell 2000, the Russell 2000 has been that, has been a leader in the market, no doubt about that. It showed no weakness post-election. In this consolidation, it has shown no weakness in this consolidation, and it still has a very good trend, a very good pattern, and you have to have the Russell 2000 ranked at the top of the list right now in the indexes, and it's threatening a breakout in the small cap index. So you got to be looking at small caps here too.
Yeah, and that breakout on the long term on the Russell, I mean, that multi-year breakout would put it at the top of the list for me. Obviously, I would have NASDAQ right underneath it, but man, you're really splitting hairs, quite frankly. Stocks
right
are strong
now,
across the board.
But that's the thing. When you're seeing this type of price performance in all the indexes, this market wants to buy. It's embraced that theme we've been detailing for 3.5 weeks post-election now. And we haven't seen anything in the data so far that's came away from that.
Marky, anything to add to just broad market analysis, top-down stuff here before moving to commodities you want to throw in there?
I mean, the one thing that in looking at those charts as Matt was going through them, to add to the market want to buy, look at the 9 hold on the broad markets. I mean, these general setups, you come down, bounce off the 9, bounce off the 9, bounce off the 9, with pretty clean precision. That's a market that wants to get gobbled up, and I've seen I've seen 2 stocks off the radar, one Neo, and I want to bring these up because I think it shows the absolute ferocity of this market right now, where you had a gap down that got bought up like it was nothing. Another one, VERI,
Can I say something before we do this?
Yeah.
I know the popularity of these stocks this year. These stocks are not going to be as popular moving forward.
Oh, I agree with that completely. But I'm just talking about short-term sentiment right now. Do VERI?
And when I mean they're not going to be popular, they're not going to go up. That's what I mean.
VERI. But this is like when I see things bounce off, like you gap down, it was down 20%, basically within minutes, gobbled up all of the thing. I'm seeing this, the underbelly of the market that I like to call. When I see the precision off the 9 on the broad markets, when I see things this market is ridiculously bullish.
Are either of these stocks on your 100?
Yes.
Both of them?
Both of them.
They won't next year.
Yeah.
So,
just these frothy natured stocks, Mark, obviously they've gone parabolic recently and they're very much in the consciousness. Go ahead, Matt.
Okay, let me say this. You tell me if you agree or disagree. I believe we should be looking at the big names right now. Well-known names, established companies. That's what I believe. I don't believe we should be looking at companies that were bubble driven in 2020.
No, but it also gives what it is it's not a recommendation to buy or trade.
No, I just making a point more than anything.
No, it's understanding the fervor of the market, the tenacity of the market right now. One day that will all give out, but right now, those broad markets are set for a breakout, and when they break out, it's going to take a lot of those blue chips with them.
I kind of feel like Wall Street's going to get its revenge on the consumers in 2020, in 2021.
What do you mean by that?
A lot of the money that's been made in a lot of stocks this year from consumers are not established good quality companies.
You don't think the kids without training are going to rule Wall Street and investment markets forever?
No,
I don't
think
either.
They're going to look back in 10 years, say, do you remember 2020? That was a really good year.
That was crazy. Yep. That was a crazy year. Everything went up. Yep. You could throw a dart at it and you could pick good stocks.
I think there's going to be a lot of people saying that the stock market is just gambling starting next year.
Yeah, you need education to be able to do what Steven's done, by the way, do 1,000 live trades, execute them, money management rules, all that kind of stuff. You need actually a process and a system. I'm with you on that. Let's go to commodities here next, if we can. Crude oil first. And, Mark, we were talking about this throughout the week. Last time I had you on the show was Monday, and it has been developing a little bit here. Nice little hesitation on the 9 yesterday. Now we're pushing again here today. A breakout's got at least $4 upside, maybe even $5 upside, depending on where you'd want to put that target. But Mark, what's your read on crude right here?
Yeah, it's the 9. It bounced clean off the 9. When I see these clean bounces off the 9, I just am like, there's another leg up. There's another leg up, And so, go ahead.
But are you going to play it though? Because once again, everybody sees that.
Once again, I put this gigantic reopening vaccine play into this really massive group, really massive group of companies and commodities. And one day soon, you're going to see separation in this group. Where movie theaters and cruise lines and oil and finance and everything. One day there is going to be a little bit of separation. I just think oil's the least popular of the group.
And I won't play it, Matt, but it will give me more confidence to trade that Chevron trade, right?
Yes, that's kind of how I see it too.
Exactly. So you got the setups in the energy sector that are developing. We got the pullback we want. I see health in crude. I don't see craziness in crude. I'm like, okay, I got more confidence to take the energy stocks and trades when I get them. So that's kind of my approach to it. Matt,
when you're looking at crude, the reality is if you're going to be a successful trade on crude here, you got to have a loose stop underneath that pivot point, and you're taking too much risk on crude. I don't think you have the same analysis on Chevron.
Yeah, no, I don't either. In fact, I really do like that Chevron setup. I think it's developing very, very nicely.
It's a really nice setup.
Yep. By the way, OPEC Plus keeps talking like sewing circles. They're trying to hint at what they may or may not do. I don't care until they actually do something. Wake me up when they actually talk about curbing production or what they're going to actually do in January and the first quarter of next year. It looking pretty healthy here. Let's flash through commodities, Matt. Let's look at gold next if we can. Bearish retracement on the daily, but the weekly is a bullish and the monthly is a bullish kind of setup in the longer term thinking. Matt, I don't see anything to update from yesterday. Anything you want to add to that one here?
No, battles taking place in the short term. You got this as the overextended short-term bearish downtrend forming a bearish retracement. Those are pretty standard when you have these types of trends coming into the 200-day moving average. I do expect a double dip coming into the 200-day moving average, but the price action you're seeing at the 200-day moving average does support buyers coming back in at this point, especially when you couple that with my analysis on the dollar and you see it yet again. Look at that. Called the breakout last week. Look at this. Boom, boom, boom. Down. Ultimate target. It's not going to get there in one price move, by the way. 24 is a big, big, big move to it. So you got the dollar a little bit overextended. Expect a little bit of consolidation, maybe a retest of that. That's going to bring gold back down into that 200-day. Ultimately, I expect the dollar to come down, gold to actually find support at 200, gold to find support go up. So the battle's going to take a few, maybe in a week or so to kind of play out here. But right now, what you're seeing is fairly constructive for gold and not constructive for the dollar.
Definitely not constructive for the dollar. I mean, that breakdown is legitimate, no question about it. And gold.
Well, and couple that kind of with the news today, Mark. And what was that news on Europe, Mark?
Listen, there's chatter out. Like one of the reasons that you're seeing euro strength right now here. How am I doing the Forex analysis while I'm not eating?
Because I wanted you to stay here.
This is some bull crap right now.
Listen, you're all over this news. This is your fault. You're the one who brought this news up.
Listen, most of the time monetary stuff doesn't catch my attention because it's just this gigantic fiat crap fest. But this I found very interesting. It caught my attention. There's chatter out there right now that the European Bank has run out of monetary tools. That because Jerome Powell and people in the Fed, they love to use. We got more tools in the toolbox. We got more tools. We got more tools. Well, there's speculation that toolbox, European Central Bank has used the screwdriver, the hammer, the pliers. They've even used the little putty scraper you have in there. They're out of tools.
All right.
And so that's the chatter, the rumor, the speculation, which means that for that crap fiat currency, there's nothing left for them to do. So that's as bad as it can get right now, which ironically in this gigantic fiat palooza of which currency is worse means euro strong.
A couple things. Number one, when you're specifically talking about the euro and quantitative easing and Japan and quantitative easing and American quantitative easing, you got to understand the depths of the toolboxes that they talk about, right? And so when you're dealing with the Japanese economy, the third most utilized currency in the world, you're also talking about the third highest economy in the world, right? When you're talking about the euro, the second biggest economy in the world, the second currency in the world. When you're talking about America, US dollar is the number one currency in the world, number one economy in the world. Fine. But when you break those down, the yen has 3% reserve status, the euro has 26% reserve status, and the dollar has 65% reserve status. When you look at it from an economic perspective, the Japanese, you're talking about $1 trillion economy. The euro, you're talking a $6 trillion economy. In America, you're talking $21 trillion economy. So when you talk about the depths of the tools that Japan versus Europe versus the US has, the US has the most tools in the shed because they have 65% reserve status, which means when they print money, they don't have the inflationary impact that say the Europeans do, or say, and definitely the Japanese do, because the money doesn't stay home within the same economic system. It gets distributed to the rest of the world, and we don't have the velocity because of where we put that money. And so in terms of this, yes, Jerome Powell is absolutely right that the tools in the shed are much, 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 much more efficient and bigger than what, say, Christine Lagarde has or Corrado has out of Japan. So yes, they are right. And yes, Europe is going to run out of those tools a little faster. But then you look at Japan, you always got room down below zero. And unlike America, who has not seen actual negative interest rates, we've had effective negative interest rates, but we haven't seen an actual announcement of negative interest rates. Europe's been negative interest rate for years now. Japan's been negative interest rates for decades now. And so, yes, you're right. America has more tools in the shed. But I want to remind Jay Powell and the overlords at the central bank that if you continually use those monetary tools, you're going to be like Japan and you're going to be like Europe. And that is not the goal in sight. That's not who we want to be. That's not who we are in America. So, yeah, I do agree with what they said, but obviously that type of news is going to drive the euro up and is going to drive the dollar down. And in this world, my second point, Mark, is you talked about this fiat nonsense about the race to the bottom, right? Can't you say the exact same thing about the fiat nonsense and what drives currencies to the stock market? Literally the exact same thing. I mean, in a world in the last post-election, our analysis has not been what sectors go down and what sectors go up. It's been what sectors go up more than the other sectors.
Yeah.
Okay. So isn't that the same conversation? So so as stock traders, I get it. You think you're better than currency traders and you make fun of currency traders, but the analysis is the exact same. You're no different. It's the same thing.
Mm-hmm.
We are better than currency traders.
Why?
You're not. No.
Because I want to feel good about myself.
Here comes
I'll just say it's the same people. It's literally the same people.
Calm down. That's all I'm gonna say. Calm down. That's a good break. That's a good move on the euro.
Same team, Mark. Same team, Mark.
Listen, Cody said I wasn't a real Dallas Cowboy fan because I wasn't born in Dallas. So
it might have been the 20 years you stopped cheering on the Dallas Cowboys. It could have been that.
Well, I mean, and this is the thing about stocks. And
You can't
this
be
is
a bandwagon fan. You got to either be a fan or not a fan. Forever.
Oh my goodness gracious! I'm glad you live in a world that's so simple. One day there will be downtrends. One day there will be downtrends in Procter and Gamble, but not the rest of the market.
Yeah.
That is one of the biggest distortions of 2020. And one of the things, I mean, it's like we joke, you can't bearish trade anything because this gigantic liquidity bubble that we're in just is keeping everything propped up. One day, and we're taking advantage of the bull market, right? We take what the market gives us. You know, the market gives us something, we take advantage of it. But one day it's going to be really good again where you can do both bullish and bearish trades. And that's where skill set and that's where knowledge will really maximize. I mean, listen, good for the millennial traders making money. I'm making money, or all making money. It's great. But there will be a day soon.
That party's ending soon.
Whether it's 3 months, 6 months, 9 months, I don't know. You don't know. Nobody knows when that starts. But one day there will be downtrends in stocks. There will be uptrends in stocks, and there will be able to trade both. And that's the day that I think what you were referring to earlier, Matt, that's going to gobble up a lot of new traders in 2020.
I think Wall Street's going to get their revenge.
They always do. Over a long enough timeline, they always do.
Wall Street took a lot of heat in 2020. I think they're priming up those algorithms.
Yeah, I'm with you. By the way,
I think Goldman's working on their $2 billion algorithm right now.
I don't even want to know what they're working on behind the scenes. They did upgrade Tesla today, by the way. We'll talk a little bit about that later. I did want to peek at Bitcoin here before we finish top-down analysis, if we can. And Mark, you missed the show yesterday. I would strongly recommend you go back and watch the segment from Jake. Jake did an incredible job breaking it down. I loved the conversation that Matt and Jake and I were having yesterday on the halftime report. It was fantastic. So if you didn't get a chance to catch that, guys, go back and watch yesterday's show, specifically when Matt and Jake start talking Bitcoin. Matt, what's your read here on Bitcoin, just from a chart perspective?
Last week, before the Thursday massacre of all things Bitcoin, that, if you blink, it didn't actually occur. Before that, I said the trade was over and you're waiting for consolidation underneath 20K. And the longer it consolidates, the better that trigger is going to be. And Frank made the joke, you might not get it. And I said, yeah, you're right. You might not get it, but we're getting it. And the longer this consolidates, the more you're going to like that breakout of 20K, in my opinion. So I'm not kidding. I would love a month of consolidation underneath 20K. I don't think you're getting a month of consolidation, but I'm just saying the longer it goes where it's still playing defense, the more you're going to love that 20K type breakout. And you're getting to the point where you're consolidating. I know you see that. Look at that test. It doesn't have the strength to get above 20K yet. Look at that test. Doesn't have the strength to get above 20K yet. Look at the test today. Got into that 20K. Doesn't have the strength yet. People are looking to sell at 20K. When that changes, you'll see momentum above 20K. The longer it consolidates, the better it is for that 20K breakout. But at this point, any close above 20K has to be triggered.
Yeah, definitely. And I think
and when I say has to be triggered, if you're a Bitcoin guy,
if you're a Bitcoin
girl.
trader or
yeah,
girl,
if you're a
for
Bitcoin
sure.
trader.
Yep, absolutely. Mark, any thoughts on Bitcoin here? I know that you've been playing a lot of the ancillary products recently. What's your read on the chart?
That's a good term for it. I haven't came up with it. I like that. The ancillary products. Yeah, listen, I continue to play them. It's been my biggest position. I've loved the institutional move, and I love. Listen, I get this biggest kick out of, as you guys do too. I mean, like these absurd price targets you see that, like by the end of 2021, it'll be at 200,000 or whatever. Hey, if that's the case, good for whatever. I'll make some money on the way up. If it stays where it's at, I'll make some money where it's up. If it goes down a little bit, I'll make some money up where it goes up. If it breaks out, I'll make some money. Like, I mean, if it crashes, I'm going to lose some money, right? But
eventually, you're going to get to, I made money.
But
that what we're hearing?
So
okay.
Like
Mark's happy. He made money. He's playing with house money right now.
I'm so playing with house money, and I'll continue and I'll push it. And I don't know. There's always a point in a chart where price hits a certain level where I'm like, I'm done. Like, let's say Bitcoin exploded to 30,000 next month, right? I'd be like, I'm done.
But
made
why
my
30?
money. I'm just because percentage move, like where you have a percentage move in a short amount of time. That usually scares me off. Like
if it goes to 30,000, I promise you, I'm going to try to talk you into staying.
But if it goes to 30,000 by the end of next year, I'll make some money and I'll gradually adjust to new price levels. It's always what always gets me off is when you have this big, huge percentage move up in a short amount of time. I'm liking the breather we're having a little bit now in Bitcoin. Keep breathing, and then have it give us a new breakout, and I'm on board.
If Bitcoin goes to 30,000, nobody's selling.
So it's just one of those things, and it's one of the things that's great about having a diversified portfolio, right? Where you have some gold, where you might have some oil, where you might have some copper, you got some Bitcoin, you got some reopening stocks, you got some tech. I mean, a diversified portfolio is really fun, and it really makes trading and investing so much stress-free. Yes, if I was 100% in Bitcoin, would things be even better? Sure, but that's irresponsible and stupid. And that's the kind of thing that can keep you up at night. If you have that Thursday on Thanksgiving, right? Can you imagine having 100% Bitcoin on Thanksgiving Day? Probably a little, that turkey's not tasting as good as it should. Mm-hmm. Trading and investing should never be a distraction from your real life. It should always be a complement, always be a road to help you get to where you want to get in life, financially, freedom. And one of the ways to do that is to have a diversified portfolio where, and I'm heavier on Bitcoin than I'm in other areas, but I'm happy with that. But it's not an irresponsible that if Bitcoin went down 20% tomorrow, I'd still sleep like a baby tomorrow night.
Mm-hmm. One thing I do want to say to that, because I do agree with what Mark's saying, position size is so vitally important in these speculative asset classes. But if your conviction on Bitcoin is to the level and your education on that product is to a certain level, then I do believe focus is okay, right? And focus is when you have a conviction in an investment so much that you're willing to take the ultimate risk on it. And so if you understand that and you're going into that, because that's, guys, focus, like, let me put it like this. Diversification gets you to live a very, very comfortable life, a very, very successful financial life. It could allow you to literally leave a legacy to your children and generations, no doubt about that. But focus in investing, when done right, can create generational wealth. And so I understand somebody who has an educational level on Bitcoin, an understanding of ultimate risk on Bitcoin, and is understanding that risk component to be able to focus. And so I just want to make a point that there are times when every single one of us focus on a certain industry, a certain sector, a certain product in the market, a certain tradable asset, to where we do break certain portfolio design rules because of that focused nature of that product line. And Warren Buffett, the ultimate, Warren Buffett doesn't believe in diversification to that degree, but he believes in focus, right? Focus on certain things. He's focused on industrials. He's focused on he's focused on, you know, dividends. He's focused on value. He's focused in that area. And you know, what can you say about that? What can you say about that type of analysis when it's Warren Buffett who focuses? So I would say that for 99% of the population in America, the diversified route is the better route. The portfolio design where you literally position size to take that risk of 2 to 4% to the portfolio. But there are times when you do want to focus and you do want to get aggressive, because those are moments where you'll remember, not for the next couple of years. Those are moments you'll remember. Your generations could remember that.
Well, and with Warren Buffett, one example of that is he has a very, very large position in Apple Computer. He's maintained it even through all of the pandemic and the back and forth and all that kind of stuff, because he believes in that business model and wants to be in equities, just the nature of what it is.
And he also missed down on all things crypto and all things technology, and he's okay with that.
Yeah,
I think he's okay with that.
I don't think Buffett will ever buy a Bitcoin. No, I don't.
Well, and that's what Buffett's talking about with focus. He's not talking about putting all your eggs in one basket and let it fly.
Buffett buy a Bitcoin sounds like a parody song ready to be to happen.
He bought gold last year, this year. So
I guess I should never say never. Yeah.
I mean, he did buy gold this year, guys. We didn't think that was going to happen. So maybe Buffett ultimately comes in like literally a week from now. Buffett bought Bitcoin. Oh my God.
That would be pretty big news. If that,
I think
he's had a lot of things to say about it.
Buffett buying Bitcoin.
Buffett and Bitcoin. There could be so many amazing.
I think that is an Eminem rap parody ready to happen.
Dude, the song album and the catalog is just growing now. I mean, I think we got to put all these together at some point.
Buffett and Bitcoin is absolutely a Nelly rap song.
Could be. Yeah.
I chose Nelly for a reason.
Yeah. I'm not connecting it, but you'll have to fill me in.
I'll talk to you about it after the halftime report.
All right. Let's make our last little transition here. Kind of a light news day in the markets here today, guys. A lot of dojis pushing breakouts. Very much an update from what we've been doing. There's several things I will say right now. Number one, if you didn't catch last night's recording, go and watch it, Mark. It was a fantastic show. Really loved it. Great job on that. Those of you who joined me in the lounge earlier, thanks for your participation. That conversation was great. I did click record. I'll post that a little bit later. And we got Cash Flow Club tonight, but I got some stock news first, Matt. A couple of just quick ones, quick companies here. Give me Tesla first. You had mentioned, we talked a little bit about Goldman Sachs earlier, and they did come out and they did upgrade Tesla even after this huge run that Tesla's been on. Looked like it wanted to stall there at 600, started coming back to the 9. Goldman actually stuck a buy rating on the company. In the note to clients, they see 30% more upside based on faster than expected.
I was going to say, I don't know what they said. I was going to say 1,000.
They say 30%, so more like 800, I think.
Not 800. Okay.
Yeah. So they're slapping a pretty good target on there, slapping a buy upgrade on there.
Just go 1,000. Why not?
Why not? It's a good round
Tesla.
number. Yeah.
Why not? God. Just make it up, Goldman. Come on.
This stock is incredible. Just the year of this stock to me is one of the most memorable things of 2020 for, starting the year out, but pre-pandemic, the way that it was dealing with all of the euphoria, Matt, and now we're pushing 600 again.
Don't get me wrong. I like Elon, but Elon was threatening his employees 2 days ago. Like, seriously.
Oh yeah. And the stock is now back up on that. We have to cut costs.
We were literally making fun of it not being up that day. Like,
Yep.
why is this stock not up? This is a day when Tesla goes up. Negative news always drives Tesla up. And well, a day later, Tesla's back up.
Yep. Yep. Another one that caught my attention today was Facebook. Let's bring up FB if we can. 40 states, Matt, next week plan on filing an antitrust lawsuit against social media giant. Stock isn't moving more than 1% here today. It's another reminder to me, even though these are very nasty headlines, when you see them on their face, they've been happening for years. Facebook and many of these other companies, Google included, they've been fighting these types of things and keep moving forward. Matt, do you have any read on this antitrust suit that's starting to develop?
No, Facebook's I honestly don't. This is news that should not surprise anybody. My only thing I want to ask you guys, has there ever been a more hated company in American history than Facebook?
There was
especially at an all-time high after, oh God, how much price appreciation has Facebook's had in the last 10 years? I mean, in the last 10 years, Facebook's done that. Just a ridiculous juggernaut.
I'll give you a couple. I'll give you a couple. Yeah. AIG.
No.
AIG
was not hated. AIG is hated by people like us.
Yep. It was
It's
strongly
not hated by
hated.
but it is not. You can't put AIG and Facebook in the same
If
sentence.
Jay Leno did his little thing at night, I mean, 8 out of 10 Americans wouldn't know.
People don't even know what AIG is.
Walmart.
Even when they have financial risk to AIG, they didn't even know what AIG did.
When Walmart was hated, it was hated.
No, it was made fun of. It was made fun of.
No,
it wasn't hated. It was made fun of.
I watched Larry the Cable Guy special on Netflix last night, and he ripped on Walmart for 5 minutes.
Yeah, it was made fun of.
No,
it was made fun of. It was not hated.
There was a period where it was like they're killing mom and pop shops, they're killing local economies, they're killing this, they're killing that.
Dude, AIG and Walmart, come on.
Dude, I hated Walmart for a long time. I hated them real bad for a long time. Although I did change my.
I think it's easier. I think it's easier to find somebody who actually likes Facebook. It's harder to find someone who likes Facebook than it is to find somebody who hates Facebook.
I think Mark likes them.
Nobody likes them. Even people who use them don't like them. That's the point with Facebook. But so my point is, when Facebook gets hate, since everybody knows they already hate them, doesn't have an impact.
They've already heel turned anyway. This is just who they are. Yeah. Yeah, I'm with you. I think there's
Zuckerberg should just lean into being the ultimate most hated person in world history.
I don't think he would change his public perception.
Now, I want to take that back because that's an inaccurate statement. He should be the most hated alien in the world history.
Dude, one of the reasons Matt's probably right on this, I'm trying to think about it a little bit.
I'm sorry.
Because Zuckerberg's
Enron
is one of the most well-known CEOs, right?
Yep.
And he is like, nobody likes. Like, seriously, if you met an individual that's like, I love Zuck, like, nobody likes him.
I'm not saying the worst company. No, Facebook's a juggernaut. I'm saying, is there a company that's ever been more hated universally? Because the companies you referenced, nobody hates Walmart. They might not like it, but they don't hate it. They use it. They see it as a necessity. AIG, nobody even knows AIG exists. I'm willing to bet half of America thinks AIG is no longer a company that went bankrupt in 2008.
People hate their bank, maybe a Wells Fargo.
No, they're loyal to Wells Fargo. Are you kidding me?
ExxonMobil poisoning the planet.
No, not even when the Exxon Valdez happened did the hate on Exxon even approach the furor on Facebook.
BP was pretty hated for that stretch because they tried to do those commercials.
Only by a certain segment of the population, though.
And they're like, we care. It was like, it was so bad. It was like,
you're right. Environmentalists hated BP, but it was not universal. Republicans, Democrats alike, millennials, all hate Facebook.
I can't think of one, bro. Honestly, I can't think of one.
My point in bringing this up is when they get a lawsuit of 40 different states, Republican and Democrat alike, and Democrats bring them to the hill and Republicans bring them to the hill, and Democrats hate them because of the political situations and allowing certain things to happen on Facebook, the spreading of disinformation. Republicans hate them for censorship. They are universally hated. So when news comes out like this, it's like, okay, yeah, Facebook's under the watchdog again.
Mm-hmm.
Point is, we're used to this type of stuff on Facebook.
I hate Comcast pretty bad, but no.
I hate Comcast pretty bad too.
I can't think of one that's more, and I do agree. The market usually just kind of takes it. How many times have we had a headline about antitrust or the DOJ or whatever it is? The market doesn't care.
No, like people don't even like going to Facebook to use Facebook. So no, it's just, but they're a juggernaut. Yeah. I have no interest in Facebook though.
Yep. Last one for me, actually maybe two more. Let's talk Amazon next if we can, AMZN. They actually, we know the success of Spotify this year with their stock performance. Amazon's had a great year as well, obviously very different companies, but Spotify got into the podcast business. Well, Amazon is following suit. There's reports that they're in exclusive talks to purchase Wondery, which is the largest independent podcaster in the world. Acquisitions like this have been across the board this year. I saw Spotify doing it over and over again. Looks like Amazon's going that route, Matt. They've already been into video. They're getting into gaming recently. Now they're getting into audio.
You need great, financially sound podcast is what you need, Bezos. Yep. Bezos, there's this little pod called the Trading Justice Podcast, Bezos. You'll love it, brother. We keep it real. We break down the markets every week. We have some fun. People love it. Just give me a ring, Bezos. We'll work something out.
Jeff Bezos. I would take his call.
I'd take his call in a heartbeat.
I'd chat with old Jeff.
I don't know if I'd take Zuck's call.
I would take Zuck's call.
I don't think I would.
I'd have some very specific questions for Zuck. So I would definitely take Zuck's call.
He wouldn't tell you anything.
You never know. You never know. I can ask things pretty direct. Last one, Matt, CrowdStrike, CRWD. And I didn't dig deep into the report, but I did see this company did gap out on a triple top off their earnings report. Marky, this has been a market mover, very sentiment driven stock. Earlier in the year, got stuck in the mud for about 3 months. They beat revenue, they beat EPS. The question I have, very, very simple, Matt, is that gap now interesting from a chart perspective now that we're post earnings?
A little bit of a mixed action on the gap since the cash open, but yes, absolutely. You're looking at CrowdStrike above that breakout above 155. It closes above 155. You obviously are going to call that confirmation. That does look like it's going to be the case here today. You see kind of the gap up on their earnings. You see the volatility on their earnings numbers, and then you see the cash open kind of hover here. Real kind of wide range here, 165.75 down to 160. Ultimately here, you're testing those lows on the breakout channel at 160. Let's see if it can close above that. And then it's kind of a nightmare to trigger here. So I would give it a couple days to see kind of the intraday analysis to see if you can get a better clean trigger. Ultimately though, you like the breakout here of the 155. If it can close above 160, you like that from an intraday perspective, but you need to give it a couple days. That intraday analysis is kind of shaky.
Mm-hmm. Just from a long-term trend perspective, I get interested when a post-earnings breakout happens. Now I got 3 months in front of me that as patterns develop, Matt, I know earnings was right behind me. So it's going to go on a watch list for me. Got to let the price action there. Like you always say, there will be a battle. Let the battle play out. Let that chart develop and then take the first signal that actually is tradable. Guys, that's all I've got today. Pretty light news day in the market. Let's get final thoughts here. Marky, anything from you, sir?
Listen, it's the same thing. I mean, what I've been personally doing, I have been more aggressive than I have in the last 4 weeks than any period I have. Post-election, I've been the most aggressive. It's been rewarding, but I am trying to rein in any irresponsible behavior. I'm happy making money. Sure, had I shoved all my chips in different areas a month ago, things would be even better, but I'm very happy. That is what a 10-year plan is for me. Make money. Be responsible, give yourself some powder in case for whatever reason, a news story that pops up that scares the market. I don't know what that could be, but we rarely know what it could be until the market says, oh, this matters to us. So just be responsible, be happy making money, leave yourself some dry powder in case we do have a correction at any point.
Well said. Matt, final thoughts?
Yeah, I like that. Keep the powder dry. You know, I like that thought. I mean, you got breakouts threatening in the Russell 2000. You got breakouts threatening in the S&P and the Dow Jones. NASDAQ's a little overextended. You know, maybe you're locking in some profit in some of those tech plays that happened this week, and you're looking at S&P and Dow Jones to, you know, re-trigger in there. So keep that powder dry. Get ready for the weekend. You know, tomorrow we got the obviously Friday fun day. We're gonna have Coach Frank here break down some of his charts that he's gonna bring to us in the scanner report. So definitely join us tomorrow as we break down the market tomorrow and have Coach Frank to kind of give us his picks and, you know, get ready for the scanner report meeting for those scanner reports coming into the weekend.
Always exciting to hold those, you know, kind of meetings and talk with the coaches, get things ready. And it's always exciting to have Coach Frank here, guys. We'll be back on Friday, fun day, as we always are, same time, same station. If you've not yet done it, you're new to the channel for the first time. We do the show every day. Click subscribe, click the bell, come back and join us. If you're a veteran or if you enjoy the show here today, give me a thumbs up, you know, as you walk out the door here. Appreciate you guys. Love the conversation in the chat here today. Blake, I don't know if it's Bezos or Bezos.
I call it Bezos. Tim calls it Bezos. We haven't figured it out. We've had this argument for about 10 years now.
Yeah. Maybe when he calls, Matt, you should ask him.
Honestly, I think it's to the point where Tim and I are both just stuck in how we pronounce his name that neither one of us want to come off it. We both could be ultimately wrong here.
We might both be wrong.
We don't care.
Yeah.
We don't care.
I don't really care. Yeah. No doubt about it.
You know, there's this quick video that is showing, like, there's this quick video from some English individual teaching somebody how to pronounce words properly, right? And it lays out this word, and then this is how the proper pronunciation happens. And then some American comes in and he's like, I don't give a, and I'll just let you figure out the rest. So I don't know if it's pronounced right. I also don't care.
Bozos, Dina.
Bozos.
All right.
Bozos.
I mean, bozo is a funny word, no doubt about it. I'm sticking with my routine. Bezos for me, but
Bezos.
Yeah, whatever. All right, guys, we're out for today. Wonderful. Thank you for being here. Appreciate you as always. Let us know if you have any questions. There's a pro membership link, as we always do. And if you have any questions about that, just email Mark, team@tackletrading.com. We'll be back tomorrow, everybody. Have a wonderful Thursday.